It's going to be the roaring first few 20s. The savings cushion we've got will certainly fund some really strong economic numbers. But into 2023, we'd really expect things to start looking a lot more like the years that came prior to the pandemic.
I'm Natalie Nanowski, and this is Scotiabank's Midweek Exchange, a breakdown of those big economic issues that could impact your life. Brett House, Scotiabank's VP and Deputy Chief Economist, is here. Hi, Brett.
Hi, Natalie. Can you believe we're more than halfway through the year already?
I know it's just speeding by. But if there is one good thing that came out of this pandemic is that some Canadians managed to save a lot of money because their daily costs of commuting or eating out were really cut. And now as things open up, do you see those savings being pulled down a little bit as people get back to their regular spending?
Well, in fact, we're already seeing those really high rates of savings get pulled down as people go back to some of their normal patterns of behavior. And for context, going into the pandemic, Canadian savings was at one of its lowest levels in the last few decades. We were in the single digits of disposable income. We shot up during the beginning of the pandemic to average household savings representing about 27 or 28% of disposable income. While we normally expect crises to see people putting a rainy day fund aside, the fund in this case was far bigger than we've ever seen in the past. And as you mentioned, a lot of that was driven by people who have done reasonably well during the pandemic. But at the other end of the income spectrum, we also saw low income Canadians putting a little more money aside or saving for the first time in years because in some cases they did end up getting a little more out of the emergency support benefits governments provided than they were getting in minimum wage jobs. So across the spectrum, we saw savings go up. It is being pulled down now with the reopening, and we'd expect it to be pulled down further. And that's one of the reasons we're expecting growth and consumer demand to remain really strong through this year and into next year.
Gas prices right now, they're pretty high. Where do you see them going given that oil prices have really bounced around a bit?
Well, over the last week and a half or so, we have seen a lot of volatility in oil prices as markets have tried to assess a range of incoming information. In some cases, that information has suggested that the reopening and recovery is going gangbusters. On the other side, we also saw fears that the Delta variant could lead to new lockdowns that would dampen demand for commodities, including oil. Now, it's worth keeping in mind there are two parts to the gasoline price story. There's the raw product part of the market, crude oil, where we've got a persistent supply deficit. And we're likely to see that supply deficit against rising demand continue through to early next year. Based on recent discussions by OPEC and its allies, they are going to continue increasing the amount of oil they're pumping, but they're not going to catch up to demand until sometime in Q1 or Q2 of 2022. On the gasoline side, I think we're likely to see persistent consumer demand regardless of what happens to prices in the short term. People have been cooped up and at home for many months. I don't think it's going to be a big determinant in whether people get on the road and do a bit of a road trip.
Okay, so what should we be watching for in the coming week?
Well, over the next week, we're going to be seeing new information from the Bank of Canada on how it collects and balances data in its consumer price basket. And that's the foundation for how we think about inflation in Canada. We just got a report on that changing process this week, and we're going to be producing some new analysis next week that will look at what that means for headline inflation and where it could imply the Bank of Canada is going over the next year or so.
Thanks so much, Brett.
Thank you, Natalie. It's good to speak.
Good to speak with you too. And we'll have more midweek exchange after a short pause.